Story: the importance of cryptocurrency in today's world. As the world continues to advance in technology, many aspects of life are changing, especially how people send, receive, and manage money. One of the major innovations in this area is cryptocurrency, a form of digital money that is transforming global finance. Cryptocurrency is a type of digital currency that operates without the need for traditional banks or financial institutions. Popular examples include Bitcoin, Ethereum, Binance Coin, and many more. These currencies can be used by anyone, anywhere in the world, using just a smartphone or computer. Key benefits of cryptocurrency: faster transactions. Money can be sent across the world in seconds without going through banks. Financial freedom. You control your money without interference from banks or governments. Security. Thanks to blockchain technology, transactions are highly secure and transparent. Opportunity for profit. Many people earn money by trading cryptocurrencies, buying at low prices and selling when prices rise. Borderless payments. You can send and receive funds globally without restrictions. Note: while crypto offers many benefits, it also comes with risks such as lack of regulation in some countries, high market volatility, and scams targeting inexperienced users. Conclusion: cryptocurrency represents a new financial revolution, especially valuable for people in developing regions where traditional banking services are limited. However, it requires caution, education, and smart decision-making to use it wisely. Good morning, afternoon, evening, and good night, everyone. Welcome to my channel. I am your host. Today's story is about why cryptocurrencies are important for you and me. Why do we even need them? What are they? What's the fuss all about? Let me begin by telling you a little story. In the not-too-distant past, sending money was a complicated affair. Imagine you live in India but want to send money to your friend studying in Canada. For starters, you must find the exchange rate. Then you'd have to fill out forms, visit a bank, wait in long queues, and then pray that the money reaches your friend in time. Even today, it takes several days and numerous phone calls to get money from one country to another. It's a long process that involves multiple people and institutions, each adding their share of charges and commissions. But today, thanks to the internet and smartphones, the same money can be sent within minutes, bypassing all those intermediaries. All you need to do is log into your online bank account and transfer the money. No paperwork, no queues, no phone calls, no delays. Just click and done. That's the power of technology for you. Now let me ask you a question. Do you still have to depend on a bank for the transaction? Well, actually, yes, you do. Banks and financial institutions still play an important role because they hold and protect your money. They ensure the transaction is legitimate and that you have enough money in your account to make the transfer. And while this works well for most people in developed countries, it's not so great for millions of others around the world. Many people don't have bank accounts, millions of small businesses don't accept credit cards, and many individuals don't trust banks or financial institutions, for good reasons too. What if there was a way to send money faster, cheaper, safer, and without the involvement of any bank or government agency? Enter cryptocurrencies. As the name suggests, cryptocurrencies are currencies that are digital and encrypted. In other words, these are virtual coins or tokens whose value is established and verified by users on a shared public network, a ledger known as the blockchain. Whenever someone sends cryptocurrency, the details of the transaction are broadcast to all computers on the network. If the transaction is approved by most of the computers, it is recorded in the public ledger. This method of verification eliminates the need for a central authority like a bank or government. Cryptocurrencies are based on cryptography, which makes them nearly impossible to counterfeit or double spend. In simple words, you can't copy or steal cryptocurrencies. Also, since all transactions are publicly verifiable, no one can dispute them once they're complete. The best thing about cryptocurrencies is that you control your money. Banks can freeze your account or refuse to release your money. Governments can impose capital controls or freeze your assets. But with crypto, it's all under your control. Cryptocurrencies are stored in digital wallets. And as long as you have access to your wallet, no one else can touch your funds. There are also no geographical restrictions on cryptocurrencies. You can send them anywhere in the world without worrying about exchange rates, international wire transfers, or local regulations. A few years ago, someone wanting to send money from India to Nigeria would have had to go through a bank and pay steep charges. But today, they can do it themselves instantly and for much less money. Launched in 2009, Bitcoin was the first digital currency that brought the idea of decentralized transactions to the forefront. Since then, thousands of cryptocurrencies have been created, each with its own technology and purpose. Some are designed to be fast and cheap, while others focus on privacy or anonymity. Most cryptocurrencies are decentralized, meaning that no single entity controls the network. Instead, the network is maintained by a distributed group of computers that work together to verify and confirm transactions. Let's take a look at some of the popular cryptocurrencies available today. Bitcoin. As I mentioned earlier, Bitcoin is the oldest and most popular cryptocurrency. Created by an unknown person or group under the alias Satoshi Nakamoto, Bitcoin was the first decentralized digital currency. Ether, launched in 2014, is the second most popular cryptocurrency after Bitcoin. It was created by programmer Vitalik Buterin to run the Ethereum network, a decentralized platform that allows developers to build applications that can create and exchange digital assets. Tether, Binance Coin, XRP, Cardano, Solana, and Polkadot are some of the other popular cryptocurrencies available today. Now let me tell you why cryptocurrencies are important for us. First, cryptocurrencies are faster than traditional payment methods. With crypto, transactions can be completed in a matter of seconds, while bank transfers may take several days. This speed is because cryptocurrencies are not subject to the same regulations and oversight as traditional financial institutions. As a result, transactions can be processed quickly without the need for intermediaries. Second, cryptocurrencies offer more control over your finances. When you use a traditional payment method, you are trusting a third party, such as a bank or credit card company, to process your transaction. However, when you use cryptocurrency, you are in control of your funds at all times. You don't have to worry about your payment being declined or your funds being frozen. Third, cryptocurrencies are more secure than traditional payment methods. Cryptography is the backbone of cryptocurrencies, making them very difficult to counterfeit or double spend. Additionally, blockchain technology makes it nearly impossible for hackers to gain access to your funds. Unlike banks, cryptocurrencies are not held in a central location, making them very difficult to attack. Finally, cryptocurrencies are more affordable than traditional payment methods. Cryptocurrencies are very cheap to use, especially when compared to traditional payment methods such as credit cards. Most cryptocurrencies have very low transaction fees, making them an attractive option for individuals and businesses alike. However, despite the many benefits of cryptocurrencies, it's important to be aware of the potential risks before diving in. The first risk associated with cryptocurrencies is the lack of regulation. Cryptocurrencies are relatively new, and as a result, there is very little regulation surrounding their use. This means that investors are not protected by government agencies such as the Securities and Exchange Commission. In addition, the lack of regulation means that cryptocurrencies are often used for illegal activities, which can result in fraud, theft, or other problems. Another risk associated with cryptocurrencies is their volatility. The value of cryptocurrencies can fluctuate wildly, which can make them a risky investment. Additionally, the price of cryptocurrencies is not determined by any central authority, which means that it can be manipulated by market forces beyond anyone's control. Finally, cryptocurrencies are anonymous, which can be both a benefit and a risk. Because transactions are not linked to a central authority, it can be difficult to trace the source of funds. This can lead to problems such as money laundering and the funding of illegal activities. To conclude, cryptocurrencies are becoming increasingly popular as a way to make online purchases and investments. They offer a number of advantages over traditional payment methods, including faster transactions, more control over your finances, increased security, and affordability. However, it is important to be aware of the potential risks involved in using cryptocurrencies before investing your hard-earned money. I hope you found this overview of cryptocurrencies helpful. If you're interested in learning more about cryptocurrencies, I encourage you to do further research and stay up to date on the latest developments in this rapidly evolving field. Thanks for watching. See you next time.